Studies Section 3. Correction of Errors. Introduction. In Studies Section 1, we mentioned that the entries that require adjustment before preparing final accounts include provisions for depreciation and correction of errors. Detailed treatment of provision for depreciation was the focus of Studies Section 2. In this study section, we will explain the treatment of correction of errors. This topic, which many students do not find easy, should probably be the simplest topic in financial accounts. What you require to understand this topic is mastery of double entry principle. Objective. At the end of this study section, you should be able to post adjusting entries for correcting errors both with and without the use of suspense account. Pre-test. Define and give example of each of the following types of error. 1. Errors of original entry. 2. Errors of commission. 3. Errors of principle. Content. A. Nature of error. An error is a mistake in bookkeeping entries, balancing of accounts, or extraction of trial balance. There are two broad categories of errors: those that affect the agreement of the trial balance total and those that do not affect the trial balance total. B. Errors that will affect the trial balance. Recall that trial balance is a list of balances extracted from the ledger. The purpose of preparing trial balance is to test the arithmetical accuracy of entries in the ledger, to test the correctness of posting in the ledger, and to assemble the ledger balances in a way that simplifies the preparation of trading, profit and loss account, and balance sheet. The logic behind the preparation of trial balance is that if double entry principle has been correctly applied in the preparation of the accounting records, when all the balances in the ledger are listed, the full total of the trial balance must be. Expect this to happen because the same amount debited in one account in the ledger has been credited in another account. If the full totals of the trial balance fail to balance, the implication is that there have been one error or the other. Such errors are referred to as errors revealed by trial balance or errors that will affect the trial balance. That is, they are errors that will not allow your trial balance total to agree. That is, errors that will not allow your trial balance total to agree. If your trial balance fails to agree and you cannot locate the errors immediately, you will temporarily transfer the error into suspense account. After correcting all the errors, your suspense account will fall in category 1, omission in one side of the account. 2. Posting of the double entry of a transaction on the same side of the respective account. 3. Transposition of figure on one side of the account. 4. Overcasting or undercasting of entries. 5. Overstatement or understatement of opening or closing balance. To correct this category of errors, you will debit or credit the affected account with the corresponding entry in the suspense account. C. Temporary use account. You should locate errors and correct them as soon as possible. If, however, constraints of time and expertise make it impossible for you to locate and correct the errors immediately, you can make the trial balance to agree by taking the difference to a suspense account. If you are to prepare a temporary final account before correction of the errors, you will transfer the suspense account balance to the balance sheet. If the suspense account balance is on the debit side of the trial balance, you will show it under the current. Take 2. You will show it under the current asset. But if it is on the credit side of the trial balance, you will show it under the current liabilities. D. Procedures for correcting errors. Experience has shown that the best possible way to correct mistakes is to analyze the mistakes. When there are errors in the account, the following steps may help you in locating and correcting the errors. 1. You should make effort to identify the type of each error. 2. Identify the two accounts involved by each error. One of the accounts will be suspense account. 3. Identify whether the account should have debit or credit balance. Recall that all asset accounts must have debit balance, e.g. cash, motor vehicle. Debit account credit balance, e.g. accrued expenses, creditors. All income accounts must have credit balance, e.g. dividend received, sales. All expenses accounts must have debit balance, e.g. salaries, purchases. 4. Determine whether the error has overstated or understated the balance in each account. 5. Determine the required correction based on your analysis in step 4. Interpret the error in the ledger if necessary. 6. Use your idea of correcting the ledger in posting the journal if required. E. Limitations to the use of trial balance. The fact that the totals of the debit and credit columns of a trial balance agree is not an absolute proof of the correctness of postings or arithmetical accuracy in the ledger account. This is because it is possible that you make some errors and yet your trial balance totals agree. Such errors are referred to as errors not revealed by the trial balance or errors not affecting trial balance. This is interpretation of trial balance. Errors that do not affect the agreement of errors which will not prevent the trial balance from balancing. That is, in spite of these errors, the trial balance total will still agree. The procedure of correcting this type of error is similar to that of correcting errors that will affect trial balance. The only difference is that in this case, you will be able to identify the two accounts affected by the error without involving suspense accounts. The most common examples of this type of errors are explained below. 1. Errors of omission of transaction. This error occurs when you completely omit transactions during posting. This error will not affect your trial balance because you have omitted the same figure from the debit and credit entry. To correct this type of error, you will see the omitted transaction as appropriate. 2. Errors of commission. This error occurs when you post a transaction in the wrong person's account. For example, when you post credit purchase of Jane into James' account. To correct this error, you will simply transfer the figure from the wrong account to the correct account. 3. Errors of principal. This error occurs when you enter the transaction in the wrong account. For example, when you debit cost of acquiring office furniture to office expenses account. To correct this error, you will simply transfer the figure from the wrong account to the correct account. 4. Errors of original entry. This error occurs when you use wrong figure in your double entry record. It can be described as a correct posting of a wrong figure. To correct this error, you will find the difference between the correct figure and the wrong figure. You will post to the two accounts involved based on whether your wrong figure is above or below the actual figure. 5. Complete reversal of entry. This error occurs when you reverse the rule of double entry. For example, when you debit the giver and credit the receiver. To correct this error, you will double the affected amount and post according to the rule of double entry. 6. compensating errors. This error occurs when you commit error of equivalent amount on both sides of the account, or when you commit opposite error of equivalent amount on the same side of the account. For example, when you either overcast both credit and debit sides, when you overcast and undercast the same side of the account with the same amount. In this case, you will correct of the error appropriate. Example: the totals of the trial balance of Okonkwo Enterprise did not agree. The difference of 18,500 was to the debit side of the trial balance as suspense. Investigations revealed the following errors. The difference of 18,500 naira was posted to the debit side of the trial balance as suspense. Investigations revealed the following errors. A receipt from Debor of 5,600 naira was entered in the cash book but not credited to any account. B. Purchases from Muyi of 1,200 naira were entered in his account but omitted from the purchases account. C. The purchases day book was undercast by 10,000 naira. D. Commission received of 30,000 naira had been correctly entered in the account but posted as 13,000 naira to the cash book. E. The sale day book was overcast by 1,500 naira. F. Discount received of 2,800 naira was entered on the debit side of discount allowed. The purchase of motor van of 3,500 naira was entered in motor expenses account. H. Sales to Rabilat of 12,360 naira were omitted from the books altogether. I. Drawings in form of goods costing 8,000 naira have not been recorded anywhere in the book. J. A credit note for 6,200 naira issued to a debtor was entered in the return inward book as 2,600 naira and was posted to the ledger accordingly. You are required to show the journal entries for correcting these errors and prepare the suspense accounts. Solution. Let us analyze the errors before presenting the required corrections. A. The normal double entry for posting this transaction is to debit cash account and credit Debor's account with 5,600. This error involves omission only in the personal account of Debor. Thus, the two accounts involved are Debor's account and suspense account. To correct this error, you will credit Debor's account and post the corresponding entry to the debit side of suspense account. You will discover that this error involved omission only in purchases account. The correct posting of this transaction would have been to debit purchases account and credit Muyi's account. Since the entry in Muyi's account has been made, the first correction is to debit the purchases account. The corresponding entry is to credit the suspense account. C. Recall that purchases account should have a debit side. When you undercast the purchase day book, it implies that you undercast the amount posted to the debit side of the purchases account. To correct this error, you will debit the purchases account with 10,000 in order to add back the amount undercast. The corresponding entry is to credit suspense account with the same figure. D. Recall that the normal double entry posting for commission received by cash is to debit cash book and credit commission received account. Since 13,000 was posted to the cash book instead of 30,000, it implies that the debit side of the cash book has been understated by 17,000, that is 30,000 minus 13,000. To correct this error, therefore, you will debit cash account with 17,000. The corresponding entry is to credit suspense account with 17,000. E. Recall that the balance in the sales day book is usually transferred to the credit side of sales account. Thus, an overcast of sales day book implies an overcast of the credit side of sales account. The correction should involve reversal of this entry such that the balance in the sales account will reduce by the amount of the overcast. The correction, therefore, is to debit sales account with 1,500. For the corresponding entry, you will credit suspense account with 1,500. F. You will recall that discount received account is an income account while discount allowed account is an expense account. This error is twofold: omission in the discount received account and wrong posting to discount allowed account. To reverse the wrong posting to discount allowed account, you will credit discount allowed account and debit suspense account with 2,800. To correct the omission in the discount received account, you will credit discount received account and debit suspense account with 2,800. G. This is an example of error of principle. The error affects motor expenses account and motor van account. The correction will involve transfer from motor expenses account into motor van account. Therefore, to correct this error, you will credit motor expenses account and debit motor van account with 3,500. H. This is an example of error of omission. The correction is to post the transaction as appropriate, that is, debit Rabilat account and credit sales account with 12,360 naira. I. This is another example of error of omission. To correct this error, you will debit drawings account and credit purchases account with 8,000 naira. J. This is an example of error of original entry. Recall that the value of the credit note return inward will reduce the debtor's balance and therefore be credited to the debtor's account. Since the amount posted was understated, the additional balance should be posted accordingly. To correct this error, therefore, you will debit the returns inward account and credit debtor's account with the value of the undercast 3,600. Journal entry. A. Suspense account, Debor's account. Being single entry of receipt from Debor, now corrected. DR in Naira, CR in Naira, 5,600, 5,600. B. Purchases account, suspense account, being correction of single entry in the purchases, 1,200, 1,200. C. Purchases account, suspense account, being undercast in the purchases day book, now corrected. DR 10,000, CR 10,000. D. Cash book suspense account, being undercast in cash account, now corrected. DR 17,000, CR 17,000. E. Sales account, suspense account, being overcast of sales account, now corrected. DR 1,005, DR 1,005. F. Suspense account, discount allowed account, discount received account, being discount received wrongly posted to discount allowed account. DR 5,006, CR 2008, 2008. G. Motor van account, being correction of motor van wrongly posted to motor expenses account, DR 3,500, CR 3,500. H. Rabilat account, sales account, being correction of credit sales omitted from the account, DR 12,360, CR 12,360. I. Drawings account. Purchases account. Bin drawings of goods omitted from account. DR 8,000, CR 8,000. Suspects account in Naira. Balance B/F 18,500. A. Debor's account 5,600. F. Discount allowed 2,800. F. Discount received 2,800, totaling 29,700. B. Purchases 1,200. C. Purchases 10,000. D. Cash account 17,000. E. Sales 1,500, totaling 29,700. Summary. An error is a mistake in the bookkeeping entries, balancing of accounts, or extraction of trial balance. Some errors affect the agreement of the trial balance total, while others do not affect the trial balance total. The corrections of errors that affect the trial balance usually involve the use of suspense account. Errors that do not affect the agreement of trial balance total include errors of commission, errors of principal, errors of original entry, complete reversal of entry, and compensating errors. You are advised to attempt the analysis of each error before correcting it. This is the end of study section 3. Thanks for listening.